Okay, everybody, it is me, Gregory Mannarino. It is Monday, October 31st, Halloween. Are you scared? Well, maybe just a little bit, right? Okay, so let's talk what's going on here, people. What you and I need to watch right now is this possible snapback with regard to the global debt market. I explained to you just last week that I believe there is the possibility of a snapback here. Let's talk about what's going on. For many weeks, we had this phenomenon of a global debt market sell-off. 10-year yield went above 4.3. And then, of course, we know how this played out. The MMRI crossed 300. We had Nick the Pig floated out with Mary Daly to say, hey, come December, the Fed's going to pivot. And all this just reversed in a tremendous way. Okay, lovely. Market loved it. Stocks took off. Just perfect. Okay. Then, we watched this phenomenon again, kind of, burn out a little bit. And now it appears it may, be reversing or snapping back. We need to see what's going to happen this week with the Federal Reserve. I explained to you yesterday. This is Fed week. Come Wednesday, we're going to hear about monetary policy, and it's going to be more bullshit, dog shit, cat shit, hippo shit, monkey shit, reptile shit, whale shit, whatever kind of shit you want to talk about. We're going to hear again how great everything is. Our economy is doing great. It's progressing at a moderate pace, and then we're going to hear another thing. Listen for this. In fact, it might even start today more so. We've already started seeing a little bit of this. Inflation's getting better. This is a complete falsehood. Inflation is not getting better. By the Federal Reserve's own measure, inflation has nowhere to go but worse. Okay, it's going to get worse moving forward. Their favorite indicator, consumer expenditures. Okay, lovely. And on top of that, as we know, the economy continues to crater, and every single forward-looking economic indicator, every one of them, is pointing towards more problems moving forward. Duh. Okay, so you and I got that covered, but that's what they're going to do. Despite the fact that every single economic indicator is pointing lower, that we're not going to be doing well at all moving forward, you're going to hear how great we're doing. Our economy is moving forward at a moderate pace. This is Wednesday. And then the lie about inflation getting better. And then they're going to hear again how the Federal Reserve is committed to stopping inflation by raising rates, which is not the problem at all. It's never been the problem. And that bothers me to the core of my freaking being here. The lie that keeps getting, fist fed to all of us via the propaganda ministry. Oh, it's a rate problem. It's a rate problem. No, it's a currency free fall problem. It's a money supply issue on a grand scale, which central banks continue to inflate the global money supply. Imagine that. You got central banks, and I don't want to say their respective governments because central banks are the governments, but the puppets that they put in place here, all doing the same thing, finding any reason imaginable to continue to pull cash into the now, out of the future, to continue to inflate, to play the central bank game. And it's very disgusting in my view here. So on the back of that, let's just throw an eye over here at the market. So you got the 10-year yield 4.05. All right, so we have come up. So are we going to get that snapback moment? I think they're going to try as hard as they possibly can, and probably with a great deal of success, to keep the markets pacified until the midterms play out. After the midterms, look, what were the words? BlackRock said all hell could break loose. All hell could break loose. That's not Greg Mannarino. That's BlackRock, okay? But I think they're right on target here. We absolutely could see, and probably will, see a snapback moment here in the global debt market, meaning a sell-off. The global debt market will start to sell off again, yields are going to spike again, and the stock market's going to get hit. I mean, that was the warning from BlackRock. And I think they're really on target with this, all right? That's the most likely scenario to play out after the midterms would be a sell-off here in the debt market or a snapback, as I warned about last week, okay? And that would definitely put a lot of pressure on the stock markets of the world. Okay, that's going to be just lovely and fantastic, and we'll cross that bridge when we get there. So what's happening this morning? Stock futures are lower. 10-year yield higher. The MMRI, Mannarino Market Risk Indicator, is above 280 again, people. 280. You and I watched the MMRI crater after Oink Man and Oink Woman were floated out, tell the market how great everything was going to be because the Fed was going to pivot. Fed's going to pivot in December, not this month. This month, I already told you yesterday what I believe is going to happen. You're going to get a 75 basis point hike, and then come December, we're going to get a 50, and then more than likely, we're going to get pause. And the market is going to go absolutely ballistic off of it. Unless, of course, we get the snapback. Look, the debt market it's too big for central banks really to gain full control. But they're going to try. And they're going to do this by vastly inflating the money supply. And that is obviously massively inflationary. But you see, you're not allowed to know any of this stuff. All you're allowed to know is how they can lie to you, deceive you, propagandize you, distract you, tell you to look here, you should be looking over there. It's quite a phenomenon. Gold and silver this morning are relatively flat. Cryptocurrencies catching a bid. Bitcoin about 20,700. Crude oil falling under pressure, and the dollar is stronger. The setup this morning is not very good. I mean, look, like I said, we got a 10-year yield higher. We got a dollar relative strength, okay? I know how confusing this is. The comparative strength of the dollar is higher. And this phenomenon is not going to stop. We spoke about this well over a year ago, how this would play out, and it has played out exactly like that. It's not going to stop. The dollar remains the world reserve currency. It's the knee-jerk reaction. You see, look, the fact is, as you all know, central banks are in a race to the bottom. They're not going to stop destroying their currencies, taking the people with it as they fulfill their endgame to run the entire world, to create slaves from sea to shining sea around the freaking world here, people dependent on the central bank system. How twisted is that? I want you to think about this. Private entities run the economy and they run the financial system. With that said, whose interest do you think they have in mind? Yours? Mine? No, their own. Okay? And the goal here of central banks is to fulfill their endgame, their agenda, to be the lenders and buyers of last resort, to run the world economy and financial system into the ground, to issue in a new system, to be the one world government that you and I have heard about since, I don't know, probably since we were kids. And it is absolutely playing out to be true. So look, that's where we are. That's where we stand this morning. I want you to watch the MMRI again. We are at 280. At 300, we move into extreme risk. The last time the MMRI crossed over 300, they floated out Oink Man. They floated out Oink Woman. Okay? You think that's a coincidence? Really? Duh? No? Duh? No. No coincidence here whatsoever. If we do see this snapback moment, look, this whole thing is teetering on a knife's edge. When I come out here and explain to you what I think is going to happen, it's the most likely scenario. Now, I said yesterday, I believe that this week was going to end higher with regard to the stock market. Yes, I still stand by that. But we do need to keep our eye on the global debt market. If this thing doesn't play out the way we want it to, and we see a sell-off here in the debt market, well, the market's going to get destroyed. But again, I think they're going to stretch this out beyond the midterms, or right up until the midterms. Once the midterms are over, I mean, BlackRock is warning everyone. They say, look, this could be catastrophic. Okay, we know the game. It's always the same story here. And nothing is real. There's no price discovery mechanism behind a damn thing. It's all rigging. It's just all fake. All right, look, with that said, I think you all are up to speed here. Please comment. Let me know what you think. Keep your eyes on the MMRI, people. Free to everybody. Link in the description of this video. Just save that to your computer. We're at 280. We're 20 points away from 300 again. Are we going to get there? We are eventually. We're going to so surpass 300 at one point when this global debt market again begins a real sell-off, and it's going to rock the foundation of the world. The financial system is going to melt down, and I mean melt down by design. Okay, this is not by accident here, as central banks continue to fulfill their end game, creating slaves to the system and people that are dependent on it. That's it. That's where we're at already, and that's where we're going moving forward. All right, look, I am so out of here. I got to write an article for the Trends Journal. As most of you know, I do write articles for free for Gerald Celente in the Trends Journal there. And if you don't subscribe to the Trends Journal, you really should. Gerald Celente, let me tell you something about this guy. He cares about all of you. He really does. And he's trying his hardest, just like I am and just like you are, to get this word out to let people understand what's actually going on here. Anyway, with that said, people, I am out of here, and I'll see you all at the end of the day.